Hi everyone, welcome to our channel where we help your real estate investments work harder for you. I'm Samantha from Elevate Realty in Toronto. With condo rents dropping combined with higher vacancies, a lot of investors are coming to us asking whether they should hang on to their condo investments. Before I answer this question, I want to share a bit more about the Toronto real estate market. In the past 10 years, the average appreciation in Toronto houses was 9% per year, and Toronto condos didn't do so bad either at 7.5% a year. Of course, condos had a lot more volatility, and the bulk of their returns came from a good run in appreciation in the past 5 years of 12% per year. Condos require less cash upfront and less maintenance, so even though condos have a higher price volatility, it can be a very decent investment with good long-term appreciation. Now, there is a difference between houses and condos, and before I continue, I just ask that you please subscribe to our YouTube channel so that you don't miss other real estate investing videos from us just like this one. So here's the difference between houses and condos, and I'll make my point with an example of a $900,000 house. Houses at this price typically can get you $4,500 in monthly rent. So after expenses and your mortgage, you're left with $800 at the end of each month or $9,600 each year. Part of the rent helps you build equity, and this equals $16,700 in year one. If we go with a conservative appreciation at 5%, this still comes up to $45,000 a year. So 37% of your returns come from rental income and 63% come from appreciation. This means that even though freeholds still get the majority of the returns from appreciation, they have a healthy balance of cash flows and appreciation. It's kind of like investing in stocks. You don't want to put all your eggs in one basket, and diversifying between growth and dividend stocks will give you the best combination of higher returns and stability. Now let's look at condos. For a $500,000 entry-level condo, you can get $2,000 in rents pre-COVID, which leaves no cash flows at the end of each month. Your rental income still helps you build equity on your mortgage, which is $9,300 in year one. So at 5% appreciation, we're looking at $25,000 of appreciation a year, and the return split comes out to 27% from rental income and a heavier weight of 73% from appreciation for a condo versus what we talked about before, 63% for houses. Here's the thing, if you invest in condos because that's all you can afford, plus you understand no cash flows typically mean lower returns and that you might have to pitch in to pay for carrying costs, then condos still give decent long-term returns. Some condo investors might have expected double-digit annual appreciation in condos because that was what was happening in the past few years. This caused them to be less concerned about lower cash flows because the total returns would be similar to houses anyway, and they might not have fully understood the implications of not having cash flows. So if there was a dip in rental income, basically what we are seeing now, condo investors are having a hard time hanging on and might be forced to sell. So if you're asking whether you should sell your condo, it really comes down to your cash flow position. If you purchased a condo a few years back, which means your mortgage is a lot less, you might not have a problem with cash flows. So you can choose not to sell and still hang on to your investment and benefit from appreciation in the long run. But if you have enough capital to enter the freehold market, it might be an even better idea to move from condos to freeholds right now. This is because you've probably already gained from the amazing run in condos in the past few years. Right now, condos have lost their steam, but they still have strong supports. So if you take that profit from your condos right now and redistribute your capital into a house instead, you'll end up with better cash flows, which means a safer investment, and you'll get higher, more stable long-term appreciation compared to condos. Just so you know, you'll need at least $200,000 of capital to enter the Toronto freehold market. And if you're concerned about getting a higher mortgage approval, another heads up is that banks will add the expected rental income to your qualifying income, so you can probably qualify for more than you think. Our team at Elevate specializes in freehold real estate investments, and we can help you find the best opportunities in the market. I'll put a link in the description below so you'll know how to contact us. If you find this video useful, please give us a thumbs up and help us out by sharing it on your social media and tag us at Elevate Realty CA. I wish you all the best in your real estate investing journey. Thanks so much for watching, and I'll see you in the next video.